My name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. Here is your daily technical analysis of stock index futures. And we're going to start by looking at UK FTSE futures first. An interesting lower opening. What looks like it might be a second consecutive hammer action. Not the most common sight in patterns or groups of patterns. The market once again punched down through the sidelining short medium moving average, currently 66.21, but interestingly not through the broken downtrend, currently at 65.94. That makes up the upper trend line of the recent sideways triangle. It seems the market is sliding down the top side of this broken downtrend, much as one would down a ski slope, and using it as a rolling support, if you will, as we move lower. Below we have the uptrend, currently at 65.51, that makes up the lower sideways triangle trend line. The medium moving average also currently at 65.21, and the June 2020 high at 65.11. On the upside, we still have an initial target X for the short-term sideways triangle in the 7005 area, but after last week's week of trying higher and getting stalled at the 6800 level and the last 2 days action of this week, it is looking quite distant. So far today, a lower open below the short medium moving average and still sliding down the ski slope of the broken yet seemingly still robust downtrend as support, but moving back up, though not quite near the highs of yesterday or the day before. German DAX futures. A slightly schizophrenic market yesterday. It was an indecisive spinning top, but also an outside day that so nearly became a key reversal up. I told you it was psycho. The market continues to be close above the important combination of the oft-mentioned upper bull channel line, currently at 14.656 of the May to June 2020 bull channel, plus the first projected 50% Fibonacci line overhead at 14.634. The day's low actually saw a halt once again at the lesser projected Fibonacci levels at 14.529 before finishing back up. Whilst it was now a fourth consecutive close over the previously mentioned combined resistances, it is a little disappointing to see it as another indecisive pattern, the third in a row so far. It is much as I mentioned last week, the market realizing what it has done and in getting up here in the first place. Just still keep an eye on it being a possible false break higher. So far today, a big open lower, if not in size, then in significance, below the bull channel line and the 50% Fibonacci line, the projected one, and the market moving down to the same lesser 38.2% projected Fibonacci line at 14.529 as yesterday to find support. The top side is currently capped by that 50% projected Fibonacci line. US E-mini S&P futures. A really interesting yesterday to the previous session's key reversal up. A bearish dark cloud cover pattern actually yesterday, come bearish double pattern. Not what the bulls out there would be expecting after the key reversal up. The base of the action was nevertheless still at the same combination of the short medium moving average, currently at 38.85, and the broken lower time, currently 38.90. The broken, as I said, but still important, late December 2020 to very early February 2021 bullish Andrews pitchfall. What makes this interesting is the current cooperation between the lower time and the rising short medium moving average. The sum of their combined support is greater than each individually. I wonder if this will last, as it looks like they are separating already. So far today, a slightly higher open, but we're still cautiously tiptoeing just above the lower time. We're moving up at the moment towards the short moving average, but not really moving that much. French CAC 40 futures. Initially, another gapping lower open since filled yesterday, but leaving yesterday still lower, though interestingly also an indecisive doji cross. The market dipped down and below the old filled gap from February 2020, that's between 59.20 and 60.09, but closed back within it, right on the short moving average, currently 59.42. Overall, prices are still in between the rising overhead middle time, currently at 61.64, and the lower time below, currently 58.82, of the December 2020 to January 2021 bullish Andrews pitchfork. As I've said before and saying again, all is moot until prices move out of those times. So far today, a lower, importantly a non-gapping open that has since moved down to test the lower time. This is the first for this pitchfork, as prices have moved down towards the lower time since its inception in late January, but they have never tested it, not ever. Below the time we have the old broken May/June to date upper bull channel line, currently at 58.54. Now please don't get me started on whether the last 3 weeks have been a false break higher from this bull channel. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.